Welcome back to the Money and Wealth Show. I'm Sterling Fox. At the end of every program, we ask you if you have any thoughts or comments about the show that you'd like to share with us, please send them along too, and we give you the email address, and we'll do it again at the end of this show. I have to tell you, after our guest Danielle Park's appearance on our show a few weeks ago, we have had just tremendous feedback, Danielle. A lot of people enjoyed your appearance, and I think mostly because you tend to call a spade, and you have practical survival advice for individuals. Let's get to that right now. Weird times, real estate bubble appears to be bursting, shaky geopolitical realities going on. How do individuals focus in the middle or get through all of this sanely and with, as the subtitle of your book, Juggling Dynamite suggests, end up with wealth that lasts? Mm-hmm.
Well, I think there's, it's interesting. At the speaker's dinner last night, there was a lot of bearish folks, okay? And a lot of gold bugs tend to be very bearish folks talking about, you know, disaster scenarios and that sort of thing. But the question that comes to my mind is, when in history has it ever actually been better than it is today in the world? Seriously, if you think about that, there's been a lot of advances made in various ways. We are an imperfect species. There is crisis and geopolitical risk, but I can't think of another period in history where there wasn't. I mean, if you look back any decade you want to name, there's been all sorts of trauma and crisis and concern. So I think this is a perpetual condition. So first of all, I don't think it's worse today than it's ever been in history. Okay. I think that's a sort of a navel-gazing thing, a preoccupation we all have, that it couldn't have possibly been worse than it is today. No, it's been worse, I think.
Ask your grandparents about the Great Depression. Or
war times, right. Or, you know, I think even the 70s, you know, Watergate, Vietnam, OPEC oil crisis, all sorts of crisis, and yet the world gets through it.
Of course.
So I think that the most practical thing people can do is not to buy into the end of the world scenario, or that everything is great. You need to be very practical with your own sort of scenario. So gold is one thing that, you know, beware, because I noticed that we've had a good run in golds for the last 10 years, and you've got a huge amount of people now selling gold. A lot of gold brokers, a lot of gold funds, and guess what? They're very bullish of gold.
Right.
They're bringing out new gold ETFs, and they're telling everyone buy gold ETFs or buy gold funds. And my concern is, when I look at that leverage in the system, when I look at that 13 times physical demand in the world is in these financial derivatives, in gold and other commodities, then you realize that in some ways it's a pyramid scheme, because, you know, to what extent, if you can't go to your bank and get your dollars out, can you go to your bank and get gold bars? I mean, if you own a paper version of gold, that's not going to, you know, serve you if we're looking at a liquidity crisis.
Right.
So how does it work? You know, what amount of money are you going to actually have in gold coins? Define that. Set that aside. If you want, you know, I always think of Saddam Hussein in the hole when we found him after the, you know, when the U.S. troops finally discovered him.
He looked terrible, but he had tons of money.
750,000 U.S. cash,
right?
So imagine if you had that in gold bars. How would you carry it around? Like, seriously, you got to think about this scenario, right? Not just doomsday and the world's going to end. So anyway, that's what I think about gold. It maybe has a role, but I would suggest bullion is what you're really meaning when you talk about that. If you're talking about derivative investing, whether it's in, you know, ETFs or funds or pools, it's really paper investing. So price really matters. So you have to be very careful about that whole issue of, is it a relatively high price? You know, gold could trade between 700 and 1200 and still be in a secular bull market. So if you're buying it today, you know, what's your downside risk on that, and what's the point? Because it's not paying you income. So what is the point of it, you know?
Security. A lot of people will say security, the ultimate hedge.
Mental security, perhaps. But people today need income. You know, that is the crisis of this particular time, is that interest rates are at 75-year lows. People are trying to survive on the interest that their money is providing. Equity markets haven't been cooperating for 10 years. So it's much more difficult for people to sort of garner income from their savings. The answer, though, is not to go out and blindly take a bunch of risk. The answer is to control your spending, look at ways to downsize your, quote, needs, and then also just try and, if you don't have enough capital, figure out a way to supplement your income. Try and get some more work. Think of working longer. These are the strategies that you need to take when you've got these really low interest rates and really risky asset markets. It's not a question of just piling into things and hoping for the best. You have to be a lot more careful and pragmatic about that.
What about income investments that create income? Boring bonds, whatever it may be. You're a portfolio manager. How do you counsel your clients in terms of directing their funds to income generating successful investments?
Well, we presently have about a 50% weight in bonds.
Okay.
Having said that, a lot of them were bought last year when prices were really low, and they've done really well. It's not as easy today to just turn around and buy bonds because they are back to being highly priced again. So bonds have a role to play for stability, but you have to be careful of the price. I don't believe in paying more than par for a bond, paying 107 for something that's going to mature at 100. You have to always be mindful, again, of price. So bonds have a role to play. Income is great. If you can get income above 3% these days, that's considered good. I caution people, again, they talk about equities as dividend paying, as part of an income strategy. It's not a good strategy when prices are in the middle of a major correction.
Right.
So, you know, the answer is, again, if stocks are overpriced and correcting, you don't want to hold them. We don't have any equities right now. We were back out of them in January. You got to park that in cash, and you've got to wait for better prices. But I think they're coming.
All right. Danielle, unfortunately, we're out of time, which of course means that you'll have to come back and visit us next time you're on the West Coast.
No problem.
It's been a real pleasure having you. Thank you so much. JugglingDynamite.com is Danielle's website. It's a terrific place to visit, very instructive. Thank you so much.
Thanks,
Wonderful to
Charlie.
see you again.
Thank you. My
and we'll
pleasure.
be right back.
Good afternoon. My name is Larry Ray. I'm the chairman and CEO of Molycorp Gold Corp. As the name states, we do have a deposit we're developing in British Columbia, which is a pure molybdenum deposit. But our focus these days is on magnesium in Nevada. Through serendipity, we discovered a large deposit of magnesium running about 10% with a high purity and consists of about 256 million tonnes at this time, 52 billion pounds. Our main emphasis is to move this project forward by beginning a drill program later this year in which we can increase the integrity of the resources into the indicated and inferred, as well as increase the resource itself. For further information, please visit our website at molycorp.com or phone us at 604-531-9639.
Tax Tips with David Ingram.
You getting a pension from the old country? Well, some are taxable, some aren't. Cyprus's old age pension, for instance, is not taxable by Canada, Article 18. But Germany's old age pension is taxable, and they've changed the method of taxing it 3 times in the last 5 years. If you're getting a pension from the old country, check in to find out whether or not it's a taxable pension. You might have to read the treaty for that country, but it'll be in Article 18. Make sure you check on it, because we just found a person with 3 years of Cyprus pensions paying tax, and now they're entitled to a $5,000 refund. That's a tax tip from David Ingram.
And that's our show for this week. Our thanks to David Ingram and to our special guest, Danielle Park. And thank you for joining us. If you have some thoughts about today's show that you'd like to share with us, please send them along to comments@themoneyandwealthshow.com. I'm Sterling Fox. See you next time.
Comments made on the preceding paid commercial program are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time.